The last time we had Dow theory non-confirmation, global markets crashed. And so he's got two non-confirmations here. And the first one, you're looking at the Dow Jones Industrials are in black. So these are the companies that make this stuff. The Dow Jones Transportations are in red, the companies that ship the stuff. And they were rising, and the Dow Jones hit a double top while there was a divergence, a fall in the transports. Here we have the Dow Jones just dramatically going north, and the biggest divergence in history with the transports falling while the Dow Jones are going north. Try and find something similar to this setup in this graph at all, and you can't. This is from Polymarket. Breaking. Searches for help with mortgage surpass 2008 housing crisis. So this is, we're supposed to be having this great economy according to the government. Everything's peachy according to the stock markets. And people are searching for help with their mortgage greater than they were in 2008, the global financial crisis. This is insane, and this is honest data that anybody has access to. If you search for, Google searches for give car back are near all-time highs, and that's from Darth Powell. So this is another one, give car back. Then building permits have rolled over and are falling. And what you notice here, with the exception of this false flag right here, when they roll over, a recession is just behind. And here with the exception here, it's sort of, in 1998, it didn't really roll over that much. It just slid. But it predicted the global financial crisis pretty well. But look at what's happening now. It's been rolling over since late 2021, early 2022. So we're headed for something that's probably not going to be very good. The Case Freight Index. Now the freight index, this is very important, because if we've got this booming economy and we've got this booming stock market, it means that all those companies in the stock market should be building and selling more stuff that has to be shipped to somebody. If the freight index is falling, it means that, and it dropped 9.3% year over year in August, hitting its lowest level since 2020.
The last time we saw this exact setup, global markets crashed. Mike Maloney is warning it's happening again, but this time the scale is far greater. Silver demand has exploded to record highs, while global inventories are collapsing. The LBMA and COMEX vaults are draining, premiums are surging, and physical silver is trading at a higher price than futures, a sign of extreme shortage. And it's not just metals flashing danger. U.S. mortgage help searches are now higher than during the 2008 crash. Freight shipments are down nearly 10% year over year. Office towers are selling for 3% of their previous value. Yet the mainstream media calls this a booming economy. Maloney says that's the illusion before the storm. And for silver investors, this could be the moment that changes everything. Let's dive in. And as always, let's head back to the interview.
This is really bad news. Late rent payments continue to tick up, and late rent payments are skyrocketing from Darth Powell. And they are. Look at that trajectory here. And this is, all in 2025, this turnaround. It was falling on the average, and then suddenly, this year, it just started to take off like a rocket. So we're in some trouble. This is used cars. So this is CarMax. So this is what used car stocks are doing. Look at that plummet, and this was based on sales and earnings. The stock plummeted, so used cars are in trouble. Turning to the stock market, Swing Trader says this short will be more rewarding than the COVID crash or the global financial short. Well, I'm not shorting anything. There's a potential for some serious losses when you short, or some big gains. Feel free to do whatever you want. I don't give financial advice. But look at this trend line. There's 1, 2, 3, 4 hits establishing a very, very solid trend line. And look at where we are. We're up out of the top of it, meaning that a huge crash can happen. The correction can be enormous, and we are in dangerous area. The S&P 500 versus job openings. Look at the great correlation that they had in the past. When one is going up, the other one is going up until the beginning of the end of 22, beginning of 23. So this divergence is really bad, and it's been going on for several years now. And so something is going to break, and when it does, I believe it's going to be horrific. Spencer Hakamian says, AI boom versus .com bubble, scary. Now, there's no time scale on here, but the time scale is here. This is 4 years, 98 to 2001. This is 23 until now, which is only 2 years, but you'll notice that the line here is not done yet. So they're probably on the same time scale. Now, I wish that he could have shifted this, made this go up to a scale of 8,000, and then shifted this by this 1 notch, because what you've got here is a factor of 5, and this is also a factor of 5, and it would be great if he could have lined these 2 lines up so that they start at the same point, because you'll see that today's climb is much steeper than going into the NASDAQ bubble. This is insane. The great Martis says that only twice in history has the Shiller PE ratio been above 40. You are now part of history. Enjoy. Well, you can enjoy this if you're an investor in precious metals. If you're an investor in the stock market, this is coming off the highest peak in the roller coaster, and you don't know what's coming next. Current Shiller PE at 40.15. Now, this is the Case-Shiller cyclically adjusted PE ratio that he's talking about here. And he's got a mean and median at 17 or 16. However, that's if you take just like this century. It isn't even this century's data. It goes back a little bit further. But if you take this back all the way, and I have, you'll see that if you add another century of data, this fair value is somewhere around 12 to 15, not 16 to 17. That in the last century, PEs this high were considered bubble territory. Now, 40 is bubble territory, and this is considered the mean. It's totally insane. I think we're going to get back to realistic valuations like we were at in the last century. MAC 10, the last time we had Dow theory non-confirmation, global markets crashed. And so he's got 2 non-confirmations here. And the first one, you're looking at the Dow Jones Industrials are in black. So these are the companies that make this stuff. The Dow Jones Transportations are in red, the companies that ship the stuff. And they were rising, and the Dow Jones hit a double top while there was a divergence, a fall in the transports. Here we have the Dow Jones just dramatically going north, and the biggest divergence in history with the transports falling while the Dow Jones are going north. Try and find something similar to this setup in this graph at all, and you can't.
Mike Maloney's message is clear. We are living through the early stages of the greatest financial distortion in modern history, and precious metals are the only assets revealing the truth. He points to massive non-confirmations between the Dow Industrials and the Dow Transports, a classic signal seen before every major market crash. Freight volumes are collapsing, late rent payments are soaring, and the housing market is rolling over. These, he says, are cracks in the system, warning that this isn't prosperity, it's paper wealth built on sand. In 2025, gold broke past $4,100 per ounce, and silver shot above $50, the highest in history, both driven by central bank buying, inflation hedging, and physical shortages. Investors worldwide are realizing that paper silver doesn't equal real silver anymore. Maloney warns that this divergence between physical and paper will grow, and that when confidence finally breaks, it'll be too late to buy at any price. He reminds gold and silver investors that these metals aren't speculation, they're protection. Physical metal is real money. It can't default, it can't be printed, and it's outside the financial system. Paper assets will vanish the moment the debt bubble implodes, and stackers who hold through volatility will be the ones standing when this house of cards comes down. Maloney believes silver could outperform gold dramatically, possibly a 10 times move, because industrial demand, solar expansion, and investor panic are colliding at once. Meanwhile, global silver mining output is stagnating, and refiners can't keep up. He calls this the Great Silver Shortage, not a temporary event, but the start of a systemic realignment that exposes how fake our paper money system truly is.
Now, Adam Taggart points out that margin debt taken on by investors is now over $1 trillion and has hit an all-time inflation-adjusted high. Record borrowing to buy stocks at record valuation extremes. What could possibly go wrong? Now, what I want to point out is what margin debt does in a crash when there's a sell-off and prices start to fall. Anybody that is out on margin gets a margin call, and they have to either cough up a bunch of cash, put it into their account, or sell part of their position, causing further downward price pressure. When the markets fall, people that are out on margin get squeezed, causing the markets to fall further. So this accelerates a crash and makes it a lot more vicious. George Gammon at Rebel Capitalist points out this is the Conference Board's leading economic index versus the Conference Board's coincident economic index. So one of them is a prediction of what's going to happen, the blue line. The black line is what is actually happening. And what you see here is the blue line rolls over, and then sometime later, the black line rolls over and a recession starts. The blue line rolls over sometime later, the black line rolls over, bumps into a recession, and a recession starts. What I find really interesting here, the blue line predicted that there would be a lab leak in the virology lab of Wuhan, China, and causing a pandemic, causing a crash. I don't know how this sort of stopped rising and started to roll over, but then you have a coincident crash. They both crashed at the same time. But look at what has happened recently. In 2022, this peaked and rolled over, and we have this 3-year divergence going on where the coincident economic index, what's happening is this is like fake, and something is going to break, and when it breaks, there's so much of a divergence here that the correction, I believe, is going to be vicious. It's going to be one of the worst in history. This is new housing units under construction, and then all employees in the construction industry. And what you see here again is the new housing units under construction peaks, and then later the employees are discharged, and so the number of employees falls. It peaks, the employees are discharged, but this happens during a recession. The peak happens before a recession. It's a predictor, and it's worked almost every single time. Here the peak was pretty darn early, and then this falls. Now they're inverted, so you've got to look at like the peak, and then it starts to fall, and we're in the global financial crisis where new homes, the construction fell a lot. And then look at where we are today. This peaked back in, that's about late 2021, 22. It peaked in 22 and went level. And in 24, 25, it has been falling significantly. And the number of employees is just rolling over now, predicting that we should have an official recession within months. That is what that is predicting. This is condo prices collapsed so far by city from Darth Powell. 25 bigger cities. I think this is supposed to read the 25 biggest cities with price declines. We've got California, Florida, Texas, Florida, California, Florida, Colorado, Florida, Idaho, Michigan, Texas, Washington, Louisiana, Nevada, Oregon, Colorado, Arizona, New York, Arizona, Florida, Texas. This is all over the place, but these were the biggest growth markets. So they're the ones that are where the bubbles are popping first and things are collapsing. Nightingale Associates, the two-tower Denver Energy Center sold at auction last week for 3% of its price 12 years ago. 3% of it sold for $5.3 million, and it was purchased for $176 million in 2013. In 2022, J.P. Morgan Chase Commercial Mortgage Securities Trust bought the Denver Energy Center for $88.2 million in a foreclosure auction after the owner had failed to make payments on its $102 million mortgage. The complex is just 18.2% occupied. Now, I'm going to get to this in a couple more tabs. Maybe it's the next one. I don't know. But 18.2%. Now, banks have been covering this up. People used to, after the pandemic, people started talking about all of the people working from home and how all of these commercial office buildings have this very, very low occupancy, and there was going to be this tidal wave of bankruptcies and something in the real estate sector again, but this time commercial real estate, that was going to trigger an economic crisis. Well, it turns out that what you're going to see is that the banks have been doing loan modifications and forbearance and things like that to cover up the fact, and the dam is about to burst right now. Denver now ranks as number 6 nationally for the CMBS office delinquencies at 27.2%, nearly triple the U.S. average. The CBRE, which stands for Coldwell Banker Richard Ellis Group, pegs second quarter downtown Denver vacancy at 36.8%. Let this sink in for a little bit. Commercial real estate is headed for a meltdown on a scale that we have never seen. This is going to be just like the global financial crisis of 2008, with real estate in the biggest bubble in history, bigger than then, plus commercial real estate, plus the stock markets. That didn't happen in 2008. That was residential real estate and mortgage-backed securities and derivatives meltdown. This is a far greater disaster.
If Mike Maloney is right, we're witnessing history in real time, a moment where the world wakes up to what real money is. Silver isn't just an investment anymore. It's a form of exit from a collapsing system. So let me ask you, which metal will lead this reset, gold or silver? Do you believe silver's breakout is just starting, or is this the final warning before the financial dam bursts? Drop your thoughts below. I read every comment. If you found this breakdown valuable, smash that like button, subscribe, and turn on notifications, because the next few months may decide who protects their wealth and who loses it. This is the new era of sound money, and it's only just beginning.